Hello, everyone, and welcome into CrushTheStreet.com. I'm Kenneth Amaduri, and I'm joined today with George Gammon, first-time guest, someone who's really exploded on YouTube. And, you know, when you search the kind of things that I search on YouTube, you're bound to come across him. So George Gammon, he's, you know, a celebrity in my book. He's got this signature image on his videos, you know, a disproportionate head on a small body. He makes his content super relatable, easy to understand, and he's unbridled. He really talks about the things that you wouldn't necessarily hear blatantly laid out by a mainstream news, financial news outlet. So I appreciate his honesty, his research. His website is georgegammon.com. You can find him on YouTube as well. George, thanks for coming on the show with me today.
Well, thank you for having me, and thank you for that intro.
Sir, let's talk about, you know, getting to know you as a person. Obviously, I think a lot of people have probably seen your videos, but, you know, for those who may not have, tell us a little bit of how you got into the markets, into finance, and what led you to what you do today.
Sure. Well, I almost flunked out of high school, so I have no formal education in economics. I've never taken an economics class. I've never taken a finance class. I've never taken a business class, for that matter. And I was an entrepreneur for many, many years. I retired in 2012. And when I retired, I knew that I needed to learn this investing thing for myself. And I stumbled across Milton Friedman's Free to Choose series. And then that really got me excited about Thomas Sowell, and then kind of the Austrian side of things, or the Austrian investors, I would say, like Jim Rogers and Jim Grant, Peter Schiff, Rick Rule, Doug Casey. And then I expanded in the Market Wizards books, and I kind of studied all the famous guys like Druckenmiller and whatnot, and Buffett. And then I started investing in real estate in 2012 because of a chart that I saw of the United States market going back to 1900, adjusted for size and inflation. We were about at our historic trend line, so I thought it'd be a good time to buy. And I juxtaposed that with the long-term market, long-term chart of the Japanese housing market from 1990 to 2005, when it went down by about 60%. At the time, we were down by about 50. So I didn't really know too much about what I was doing, but I figured we had about 10% downside. The cash flow was cheap with rental properties in the Midwest. So I decided to invest heavily. I went almost all in. I kind of learned the real estate game. And when I did, I transitioned from investing mostly in the United States to overseas, because as an entrepreneur before I retired, I made a large portion of my actual profit in other countries. And so it was it wasn't a scary thing for me to go and try to invest in a place like Ecuador, Colombia, or something like that. It wasn't a big deal, where for most people, maybe it would have been. So I ended up in Colombia in 2015. I purchased some real estate in other areas of South America prior to that, but that's where I started to focus. And I went there originally because oil was cheap. So I figured, I didn't know anything about oil, but the peso was loosely correlated to oil, and I knew about real estate. So if I purchased peso denominated assets, meaning peso denominated real estate, something I did know about, then that was kind of a way to go long oil. So that was the genesis of why I went to Medellin in the first place. And fast forward to today, I still am investing in Medellin quite heavily. I've done several properties there. We've either bought them and remodeled them, flipped them, or put them into an investment portfolio for rentals. But the whole time, though, my passion was really macro. And I enjoy real estate, but whenever I would sit down at dinner with friends or family, sometimes I'm sure this would annoy them, but the conversation would always revert back to macro. That was my real passion. So in 2019, I started the YouTube channel because I had a TV show in Medellin, Colombia, where they were following us around, and with the properties we were remodeling, my team, my designer, and my architect, Angie and Joaquin. And so I had all these editors and camera people, and between season 1 and 2, I needed to put them to work doing something. So I let's just start a YouTube channel. And initially it was about real estate investing, but those videos weren't very popular. But when I started talking about macro, the stuff that I actually like talking about, those videos were tremendously popular. So it was just kind of it worked well, to say the least. And I've just been doing them ever since. Maybe it was about a year ago that we started the channel, a little longer. And the channel has 170,000 subscribers. It gets between 1 million and 1.5 million views per month. And now we've got the Rebel Capitalist show, and I'm interviewing all these people that I always enjoyed listening to and used as inspiration going all the way back to 2012.
Yeah, it's a beautiful thing to watch, and congratulations on that success. And, I love hearing the stories of entrepreneurs and successful ones at that. George, was there a point in time, and you talked about it going back pretty early, coming across Milton Friedman and, Doug Casey and some of these other people, was there a point though where you were kind of more traditionally minded when it comes to economics, and then were exposed to these people? And, was there a change in that mindset that you went through? And maybe you can talk about that a little bit.
No, this total clean slate. Because and I think a lot of people don't really understand this. You can be really, really good at making money and have absolutely no clue how it all works. And it's like the difference between being a race car driver and like an engineer. And I was really, really good at making money, but I didn't know what the Fed was. I didn't know what a yield curve was. I mean, I barely knew what interest rates were. I didn't know any of that stuff. I just knew how to start and build businesses and solve problems, manage people, and do all those things that entrepreneurs do. So it was a completely new experience to me. I was a clean slate. Now, that said, when I stumbled across the Free to Choose series, it just was kind of the aha moment, because Milton Friedman was really articulating throughout that series what I had in my mind for many, many years, just through my own experiences of not only being an entrepreneur, but also being an employee. When I was in high school and growing up, and, all the zillions of jobs, but it really just made so much sense. And I kind of knew that subconsciously, but then to hear him kind of lay it out, it just was like the light bulb on. I'm like, that's it. That is it right there. That's how this all works. And so I guess that's kind of why I always leaned more to the Austrian side, because it's more kind of the free market, libertarian, private property, and more of a bottoms up approach instead of a tops down. And but I don't know that even today I would consider myself, quote unquote Austrian. Obviously, I'm not an economist. I'm just kind of a hobbyist at best. But I just try to use common sense. And I always say I don't really like the Keynesian school, or the Chicago school, or the Keynesian school of economics. It's just the school of common sense economics is what I want to be grounded in. And if something makes sense, it makes sense. If it doesn't, it doesn't. And I don't care if it's Keynesian or Austrian or somewhere in between.
That's interesting. You went right into it. And I feel like the Austrian School of Economics really incentivizes proper fundamental growth. I mean, it's people's behavior and incentivizing good motives and good incentives, and getting people to do things in a way that's productive, and incentivizing that productive behavior. So I think it's interesting that you were able to go right into that and understand it from the get-go, and question maybe some of the things that aren't like that. And, you just got off an interview you did with Peter Schiff talking about the wealth tax in California. And again, that to me is so disincentivizing for people. But they've gotten to a point now where they're attempting to control, because it's so out of control, the state, the finances, that they now need to do everything they can to control the capital rather than fundamentally encourage it. So I don't know, any thoughts on that? I mean, maybe some reflection on that interview and just what we're seeing, with California, and as it is a banner for where things might go throughout the rest of the world, really.
For sure. I think it's just kind of a leading indicator, if you will, for at least the United States, and to your point, potentially the rest of the world. Well, I don't know if I'd go the rest of the world, but at least the developed world for sure, and the quote unquote Western economies. So whenever I argue that a wealth tax or something like that is going to have negative consequences, and there's always a cost benefit analysis, and I think that's what people miss. If you're on one side, you only look at the positives, and if you're on the other side, you only look at the negatives. And I think, like, let's look at minimum wage as an example, or even that wealth tax. Sure, there would be positive things that would happen. The California government might get a little bit more revenue, let's say. So, okay, yeah, that's definitely. But what people do is they just get fixated on one thing or the other. And one thing that Thomas Sowell teaches us and articulated so beautifully is the study of economics is the study of scarce resources with alternative uses. And so there are no solutions. There are only alternatives, right? So you have to look at it in those terms. So going back to the wealth tax, I argue that on net balance, I don't argue that there are no positives. And I think, again, that's where people get confused. I argue that on net balance, it's going to be a negative. And I use myself as an example. A lot of people say, oh, the rich aren't going to leave California, or the rich aren't going to leave the United States, or blah, where are they going to go? I hear that argument all the time is, when I talk about maybe a wealth tax for the United States, people say, oh, well, where are the rich going to go? Were they going to go to some third world country like Belize? As if there's no other country in the entire world that could even come close to the magnificence of the United States as far as quality of life. And I'm not saying that the U.S. Isn't a great place to be, but come on, the world's a big place. And I spend a lot of time in Medellin or other parts of the world, and there's some really, really, really nice cities out there. The United States does not have a monopoly on them by any stretch of the imagination, but they'll always, kind of use that. I always say, listen, I'm a great example. Between, let's say, 2000 and 2012, when I retired, in the United States and in other parts of the world, but mostly in the United States, I created literally thousands of jobs. Now, I never had a company that had over 100 employees, but if you just kind of in an aggregate total, over the 12 years or so, then I created tons and tons of jobs in the United States. And since 2012, how many jobs have I created outside of the real estate investing I did in the Midwest? We'll exclude that for a moment. But outside of that, so let's say, beyond 2013 or 14, how many jobs have I created in the United States? Zero, none, not one. And I've created substantial amount of jobs outside of the United States in South America with what I've been doing in quote unquote retirement. And so why do you leave the United States? Because I got sick and tired of dealing with all the nonsense. And it's not just the regulation and the taxes, because at the current time, taxes are relatively similar to what they are. I think the taxes are going a lot higher, that's for sure. But as far as just the regulatory environment and it's hard. I don't want to say the demonization of capitalists and producers and entrepreneurs, but it's just, it's a whole other long story. But when I was an entrepreneur, I had some issues. I got in some, let's say, some battles, for lack of a better word, with politicians, and I saw the underbelly of how the system really truly works, and I realized that this was not a system that I wanted to be a part of. And I wanted to unplug myself from that type of system, because it's just, the more success you have, the bigger target you have on your back. And I just saw it going in the wrong direction. So I kind of checked out of that system to the best of my ability. And now it's great to be outside of all the political theater and the drama. My stress levels are greatly reduced, not just having to have the opportunity to be outside of CNN and the MSNBC and the Fox News and all this just garbage. It's just constantly coming at you from every direction. And even when I go back to the States now, I was just in Fort Lauderdale the other day for a week or so, just in a transfer from Medellin down to St. Bart's, where I am now. And it's just just the animosity between groups of people and how divisive everything is. It's not like that in other countries to the degree that it is now in the United States. So anyway, my point is that if the states and the government, the federal government, starts to do things that create certain barriers for entrepreneurs and producers, they're going to leave. They're going to leave. It's just, where do you draw the line? Some entrepreneurs draw that line far over, their threshold for pain, let's say, is a lot less than others. For me, I'm ready to hit the ripcord at a moment's notice, because I don't have a family in this. Well, I've got a family, but I don't have a wife and kids, and I didn't have a lot of ties. And I don't have any patience for that nonsense. I have almost zero patience for this bureaucracy that we're referring to. Where others, of course, they might have I've talked to a lot of people in the comments of my YouTube videos. They say, listen, I'm in California. I hate what's going on, but I've got all my family here. I've got this high-paying job. I cannot just leave on a moment's notice. I'm not retired. So I totally get that. But at a certain level, you're going to push out a good majority of the people. I mean, you look at what's happened in Venezuela, or what happened in Weimar Germany, or Zimbabwe. And I'm not saying that California is going to go to that extreme. They're not going to have. I'm not saying they're going to have hyperinflation there, obviously, but I am saying that at a certain point, you start pushing out the producers. And if you're pushing out all the producers, you're not going to have anything left. You're not going to have any money or any people, individuals to tax. And that's when, things get pretty bad. And if you look at California, and it all depends on the demographic that you look at in the specific area. But a lot of areas in California have net outflows that haven't had net outflows in a long, long time. So you're seeing a tax base that's just checking out. And another thing, it makes a lot of rational sense, even if you're not an entrepreneur or a business owner, to leave California from a standpoint of just what I call geo arbitrage. Right. So if you're just, let's say you make 50 grand a year and you happen to have bought a house in California in the late 1990s, let's say, and you just worked your job. Now you're close to retiring. You were making 50, 60 grand a year, which was nothing in California. But now your house, you bought it for 200 grand. And you've been making payments on it, but now the house is worth 2 million or whatever it is. And it's just a shanty in San Francisco. So you're sitting there thinking to yourself, okay, I've got maybe $250,000 saved up in my 401k. And I'm going to get, let's say, $1,000, $1,500 a month in Social Security. Do I want to stay here in California? Absolutely not. I'm going to sell my property. Excuse me. I'm going to sell my house right now. I'm going to take this $2 million and I'm going to go to South Carolina. I'm going to go to Florida. I'm going to go to just anywhere where the cost of living is a fraction of what it is in California. You're going to buy a little house there or a condo for 150 grand and you're rich, and you didn't have to work any additional hours. You didn't have to produce any more goods and services. You're just realizing the benefit of an economy that is based on asset prices, debt, and confidence, where the asset prices and the debt part of the equation always have to go up. Yeah. And I don't want to go off on a tangent, but because we've had the world reserve currency for so long, we've been able to we've been able to consume far, 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 far more than we produce. And that example of someone becoming a millionaire, let's say, just as a result of asset inflation, is a perfect example of that.
And it's so true. And it's a sad thing that people have to look elsewhere to take their capital elsewhere, where it's going to be treated better. And I think that's what we're seeing. The capital is going to flow to the path of least resistance. And they're trying to attempt to contain that capital within the borders of California. And my assumption, my instinct is that, with Elon Musk standing up to the state, with Joe Rogan saying he's going to move, these are political, figures in a way, because they're liberal, saying we are tired of it. And I think that's a big deal when you have, California, which is Democrat. And I don't want to get too much into the politics of things, but, it tends to be the fight, the split between big government, small government, and, whatnot. But I think that's going to be a big deal. I think that move is in making California politicians think twice as to how extreme they can get without things really unfolding and unraveling on them.
Yeah, and even people on the left, I think there's a vocal minority on the left that is just really kind of
right.
I don't want to use, they're just kind of crazies. They're trying to argue that there's all these different biological sex, that there's 5 or I don't know how many sexes there are now. I don't keep track of it all, but you say that there's just a man and woman or 2 biological sexes, and all of a sudden you're fired from your job and they're calling you a Nazi and everything. I don't think that's, fortunately, I don't think that's a large majority of the people on the left. At least not the people on the left that I know. I think they're pretty reasonable. And, it's funny. I went to Puerto Rico in 2013 to take advantage of Act 2022. And it's something I was talking to Schiff about the other day. And the majority of the people that I saw there back then were from California. And they're sick and tired of it. And it's not like they were just far right Republicans. And now it's not like they're big Trump supporters or anything, so they're going to Puerto Rico. No, most of them are on the left, but they're just like, listen, I'm sick and tired of this nonsense. And even here in St. Bart's, I've gone to quite a few social gatherings, let's call them. And I'm meeting a lot of people, and most of them are here on St. Bart's, and they're very, very wealthy individuals, but they're from California, mostly New York and California. And even the ones in California, they're like, I'm sick of it. I don't care. I'm just out. I've been coming to St. Bart's for vacation for the last 20 years on and off, and I'm selling everything in California, and I'm moving here. A lot of kids, in fact, a few people I spoke with yesterday at this lunch place, they had already put their kids into school here locally, and they're just looking for a place to rent while they're selling their place in California. And most of these people that I'm talking to, it's not like I get into politics with them, but you can tell just through conversation that they're most likely pretty left-leaning people. But again, you can only push people so far. And you see most of the people that aren't complaining about this, or that I see in my Twitter feed or in the comments of my YouTube video, that are defending what they're doing in California, or trying to pretend as though California is still this bastion of economic growth, and it's going to be that way just indefinitely, just because they have great beaches or something. I don't think these people have really got caught up in the system to the point where they realize that this is not a good use of my time. And I think that's an understatement, but they haven't had a target on their back. And I think that it's very hard for people who have been an employee their entire lives. And I'm not knocking that at all. But I think it's very hard for that type of person, even if they've had a very high level position, it's hard for them to understand the other side of the coin, and to go out there and risk your entire life savings, to work 80 hours a week, to sacrifice, like me. I don't have kids. I don't have a wife. I don't have a close family like that. I'm 47 years old. So you ask yourself, well, George, what have you sacrificed? And would most people look at my position now and say, oh man, George, you've got it made. You travel the world. You're in St. Bart's. You go to Medellin. You go to all these places, and you sit there and talk to all these fun people on your YouTube channel. And then you're financially successful, and but that's fine. But if you took a snapshot of my life right now, and then you told someone, hey, if you do this, and this, in 10 years, you can have the exact same type of lifestyle. Would they be willing to do A, B, C, and D? The answer is 99.99999% of people would say no. No way. Would you be willing to sacrifice having a significant other? Would you be willing to sacrifice having kids? Would you be willing to work 80 hours a week? Would you be willing to not take a day off for literally years on end? Would you be willing to sacrifice your entire, or risk your entire life savings? And if something didn't pan out, you're flat broke and you got to start all over again. Would you be willing to do these things? And I think the average Joe and Jay out there would say, listen, I think that lifestyle would be great, but there is no way that I'm willing to do this. So my point is, when you have a state like California that's coming down on people like me and saying, yeah, we realize you made all those sacrifices. We realize you took all that risk. We realize you've created thousands of jobs, but now we want to take that from you, or you're not paying your fair share, right? And that's where people that have done the things I've done, and I'm no exception. I mean, all the entrepreneurs out there, I kind of want to wave the flag for all of the job creators, the entrepreneurs, and the people that are really out there hustling and doing things that other people aren't willing to do. I just kind of want to be a voice for them, but you can only push those people so far. I think that's my main point.
Absolutely. And we haven't even got into the dollar, what the Fed's doing, the debt, and all the different things that are benefiting gold and Bitcoin. But I'd like to touch on that. And I think it's interesting because we're in a situation where the Fed and the government are seemingly against fundamentally sound confinements, things that, we would have to really scratch our heads as to, hey, can they take this to the next level? Can they contain the situation beyond where it is now? But we've seen them do this time and time again. Go back to 1933, where they confiscated gold. They did the unthinkable at the time. And then, Nixon severed the gold from the dollar, did another unthinkable thing. And time again, the Fed continues to surprise us. And we saw them do that with interest rates. Governments around the world now are at zero and negative interest rates and things that, I don't think we could have anticipated. So my thoughts are, what is left for them to do? And are there things that we haven't even considered that they're going to wrap in the banner of benevolence to present to everyone as, hey, this is something else that's going to be for the benefit of the common man and the livelihoods of the U.S. citizens? Sure.
I mean, it's always for your security, right? It's always for your safety and your security. The Berlin Wall, if people don't know, you always think about, well, how on earth do those East Germans allow that to happen? Because the government sold it to them as it was going to be for their safety and their security. Well, it ended up not being so. But to your point, so I think that, and all of it plays into Bitcoin, gold, and silver, in my opinion, just hard money, if you want to look at it that way, or just kind of a hopefully a store of value that the governments can't print. And that, I think first and foremost, you're going to look at them banning cash. I mean, that's, in my opinion, that's a no-brainer. And it just gives them too much power to resist. So I think they ban cash. I think that they come out with a form of, I don't know if they'll call it stimulus, who knows, but basically it'll be UBI, it'll be helicopter money, it'll be QE for the people. And what will be interesting is the transfer mechanism. So is that going to be through just government deficit spending, or are we going to get to a position where they've got like a Fed coin and the Fed is directly wiring or putting money into the accounts of the Americans who download the app and are on this UBI program? And therefore I talked to Ron Paul about this actually, and every individual would have a bank account at the Fed, just like the primary dealer banks. So they would, in essence, if we want to get into the wonky terms, they'd be turning bank reserves into legal tender. Now, I've gone back and forth with quite a few people, real good friends of mine who are just a lot smarter than I am on Twitter, guys such as Brent Johnson. And he right now, I don't think we're in that realm. But it's very tough to determine. But according to some people who are smarter than I am, they can't do that right now because of the Federal Reserve Act. But I think to your earlier point, at the end of the day, if the government or the Fed wants to do something, I don't care what the law says, they're just going to ignore it, or they're going to find out, they're just going to make up some way around it that is completely contrary to the spirit of the law. But they're just, it's just like the Constitution. I mean, give me a break. You think that right now we're governing our nation based on the spirit of the Constitution, the way it was written up, way back then? Of course not. Not even close. And I think the Federal Reserve Act is the same way. But my point is that if the Fed starts injecting money directly into the economy through these UBI, it will most likely go to people who will be spending it, and that will increase velocity. So you have the supply of currency units, let's call them, that are circulating within the economy are going to be circulating, or could be circulating, at a faster rate, which would increase the cost of goods and services. Now, it wouldn't necessarily decrease the value of the dollar in relationship to other currencies. So a lot of people make the mistake of combining those two things. They look at the DXY and they just assume that if the dollar is getting strong, meaning it's going up to 100, 105 or something like that, that we can't experience consumer price inflation in the United States. But that's not true. Those things can go all over the place, and they aren't even necessarily correlated unless you go out to extremes. So my point is, you can see the dollar appreciate in value against a basket of currencies, mostly the euro, while at the same time your grocery bill is doubling every single 2 months or something like that. So I think if the Fed starts spending money and getting it directly, and we have more of this stimulus, then you could see a stagflationary type of environment, very similar to what we had in the 1970s, where unemployment is extremely structurally high because of, number one, I think because the economy was very unsound as far as the fundamentals prior to the COVID virus. And now the COVID virus is just kind of the straw that broke the camel's back. So to get back down to a level of employment that wouldn't be considered extremely high is going to take a long, long time. And that's if it can come back, because going back to our earlier point, in order to get those jobs back, you have to have animal spirits, right? Going over to what Keynes said, you've got to have the entrepreneurs out there creating jobs. You've got to have people building, taking on more risks, starting more businesses. And how many people are going to be doing that if the regulatory environment is increasingly restrictive moving forward? Or California's coming out with a wealth tax. Who wants to start a business when you've got this potential, all these additional taxes and regulations? Maybe there are going to be some people that want to start that business, but the bottom line is there are going to be fewer people on net balance. And those are the job creators. That's the engine of job growth. So how do you get that unemployment rate down? Most likely you're not going to be able to for a long, long time. And unless the government comes out with a jobs program. I mean, if Stephanie Kelton has her way, or Mosler, maybe the federal government, we're at 10, 15% unemployment, and they say, okay, for everyone who doesn't have a job, boom, now you've got one. Here's a shovel, go dig a ditch, and the other guy's going to fill it up right behind you, and we'll just keep this going. They're not going to, I don't want to sound disparaging towards Mosler and Kelton because they're two smart people. And obviously that's not what they suggest. They would suggest creating jobs that the government manages, where they would produce goods and services, therefore it wouldn't be inflationary. My contention with that is I don't think the government has the capability of producing those types of jobs. But I think that my main point here is that's kind of where I see things heading. And if that's where we are heading, and there's no certainties, only probabilities, but if that's the case, then you're definitely going to want to hold some hard assets, Bitcoin, gold, silver. Right now, I also like commodities as well.
George, I wonder, when you go back to something like 1933, when the federal government confiscated gold, if what that felt like for people. Obviously, I know you weren't around for that, but were they feeling patriotic, or were they going, hey, this is a real problem. This is, encroachment on our freedoms. And, I want to just kind of reflect on that, because that's what we're seeing time and time again. And I'll go back to Henry Ford's comment. It is well enough that people, the nation, do not understand our banking and monetary system, for if they did, I believe there would be a revolution before tomorrow morning. And I think it's interesting because people just don't understand the nuance of what is going on. And so they swallow these pills and don't question things. So maybe just some closing thoughts on where we are, where things are headed, and what to do about it as this stealth tax continues to encroach on us as people.
Yeah, and that stealth tax being inflation. There's a lot of nuance in there too that I can promise you most people don't even think about it, even if they think they understand how inflation is a quote unquote stealth tax. Because I mean, I don't want to get into the tax brackets and how they measure inflation to increase the tax brackets, but I can promise you those tax brackets aren't increasing at the same rate of inflation.
Milton Friedman, right?
Well, yeah. Yeah, I think it gets even, there's further to go down the rabbit hole than even what Friedman was talking about in the 1970s. But going back to 33, when they confiscated gold, I don't know if there was as much pushback there would be today. I would assume there'd be a lot of pushback though. And the reason, I haven't looked at, like newspaper articles going back and forth. I should actually, that'd be pretty interesting. But I did go back and look at that for 1918 in the Spanish flu, because trying to compare that to what's going on today with all these lockdowns. And because from a libertarian standpoint, I don't like the government to tell me that I can't go out of my house, or I want to, and I'm not saying that the COVID is bad or good, or I'm not saying that it's not a worse than the flu. I'm not saying that at all. But what I am saying is I think people should be allowed to make their own decisions. So I mean, now you have a lot of states where these regulations and these laws are just, they're unbelievable. Like you would have never thought that could have happened in the United States. And that's what I thought. But I went back to 1918 just to get some perspective. And sure enough, they had very draconian laws back then. Now, I don't know if they went to the extent that we're going today, but as an example, in New York City, they banned spitting. So if you're walking down the street, you got caught like just spitting or something, which ironically enough, I think is still illegal in Singapore, but they'd give you a ticket. And I just talked to Schiff, and I don't know whether that was on the part we recorded or not, but because we talked a little bit when we weren't recording, and he was saying that now in Puerto Rico, if you're not wearing a mask outside, and I mean, mind you, you could be 100 yards from the nearest person. I mean, with absolutely zero chance of passing COVID on to anybody. And if you're not wearing a mask, they fine you like $100. So is that consistent with what we saw on aggregate total back in 1918? I don't know. But I know that there was pushback then for sure, that these laws are crazy. This is nonsense. This is you heard the same arguments back then that you heard here now. I don't know if it's worse now or better. That I can't decide. And same thing with when they confiscated gold. I know there was pushback, or I would assume there was pushback based on what I read in 1918. But if it was greater or less than it would be today, I don't know. But I don't really want to find out, quite frankly, because regardless of how society saw it, I know how I would see it, and I would see that as not only an encroachment on my personal liberty, but my private property and everything that I value, and I think we should value as a free market capitalist democracy. So I would want no part of that whatsoever. And I would, if the United States came down with a law like that, I would spend even less time there than I am now. At a certain point, you've got to ask yourself, is it worth maintaining your citizenship? And that's an answer that's a question that I think everyone has to ask themselves. And everyone will have their own decision or their own decision-making process. But if it gets too crazy, and who knows what too crazy is? That's another question I've been trying to ask myself a lot lately, because I just think the social unrest and what we're seeing right now could be part of this fourth turning. I don't know if you read that book, and if so, I was talking to Grant Williams about this the other day. You know, what we've seen in 2020 in the United States, it's only going to get worse, and I think it'll last for at least the next few years. And you know, so I'm not very optimistic about where the direction of the United States is going in the short term. In the short term, I'm hoping that we can come to our senses, and long term, get right back on track.
George Gammon, everyone, georgegammon.com. Visit his YouTube channel. Sir, you were an absolute pleasure to have on the show. And with all the information you gave, the history, the articulation, I really appreciate you coming on. If people want to learn more about you, your websites, maybe just share a little bit about it as we say goodbye here.
Yeah, it's just like you said, the website, Twitter, YouTube, those are the best places to find my content. And my first name is George, typical spelling. And although my family, a lot of my friends call me Jorge, my name is properly spelled George, the English way of George. And last name is Gammon.
Thanks so much for your time, George.
Thank you for having me.